Bundaberg, Townsville, Cairns, Rockhampton, and so many more. Queensland major regional centres have been performing really well over the past few years. But which ones are still set for strong growth ahead? This episode, we rank a regional Queensland list from the potential top performer to the bottom moving into 2025. My name is Junge Ma, the lead research analyst at InvestorKit. Let's get into the episode. So in this episode, we are going to go through the economic strength, market pressure in the sales market and rental market of 6 regional Queensland cities. They are Bundaberg, Gladstone, Rockhampton, Townsville, Mackay, and Cairns. Just bear in mind, we're ranking them purely based on their market pressure and the potential for growth. We're not taking too much of the economy into account when we rank them. So first city, Bundaberg. Bundaberg's population growth over the past year was actually really strong, 2% in a year. That should be the highest among all these 6 regions. And among the 2% population growth, 0.9% is contributed by internal migration. That may sound not much, but that is much higher than Bundaberg's last decade average internal migration level. The job market is more active than ever. The current unemployment rate in Bundaberg is 4.1%, and it has been declining in 2020. In 2022 and 2023, when the cash rate hiked, many cities' unemployment rate actually increased, but that didn't happen to Bundaberg. So its local economy is just keeping strengthening. In the sales market pressure is still high, but we are seeing signs of slight relief. Days on market now is around 54 days. It has stabilized ever since the end of 2022. Vendor discount around 6.7%, very similar to days on market. It has stabilized over the course of 2024. And inventory is where we see this slight relief in market pressure. Number of listings for sale has been slightly trending forward since mid-2023. At the same time, we're not seeing significant increase in the sales volume. So these two combined together, we are seeing inventory slightly trending forward since mid-2023. Now the inventory level is around 2.6, 2.7 months of stock. It is still low if we consider 3 to 4 as the balanced level, but we say the market pressure is relieving because of the slight increase over the past 1 year. In the rental market, pressure is still high as well. Vacancy rate hiked around late 2023, but since October 2023, it has come down again, and now it sits around 0.5%. That is extremely tight. As a result, rental prices have been increasing very steadily over the course of the last 2 years. Rental yield still healthy, 5.4%. Still very attractive to investors. And in the end, market cycle position-wise, Bundaberg's last 10-year annualized growth was 6.7%. That is still in line with the long-term average of 5 to 7%, but it's at the higher end of this average range. So we're seeing strong economy in Bundaberg, high sales market pressure but slightly relieving, high rental pressure, and long-term growth very much in line with Australia's long-term average. Combining all these, especially its market cycle position, I would say Bundaberg has entered the second half of its current growth cycle. And if we want to put it on the leaderboard, I would put Bundaberg at number 6. Don't get me wrong, there is still healthy growth ahead in 2025. It's at the 6th place purely because all the 6 cities are doing really strong. So there has to be someone at the bottom. Next up, we are going to Cairns. Cairns' population is also strong, 1.8% growth in a year, and that is the highest in a decade as well. Internal migration contributes to around 0.9% to the population growth as well, very similar to Bundaberg's. And again, as you can see in the chart, it is also the highest in a decade. Again, similar to Bundaberg, Cairns is also seeing a very active job market. Unemployment rate now is 2.7%, the lowest among all these 6 cities. And again, over the past 2 years, just against the interest rate hike headwind, Cairns' unemployment rate has been declining. So strong economy and active job market. How about the property market? In a sales market, just like Bundaberg, we are seeing a slight sign of market pressure relief, although the market pressure now is still high. So first data point we are going to see is the days on market. Days on market now is around 46 days, and it is already a bit higher compared to the same time 2 years ago. Vendor discount around 6.6%, and again it is slightly trending upward. And from a supply and demand perspective, we are seeing this increase in number of listings in 2024, and at the same time number of sales is declining gradually. Not fast, but we are seeing this slight downward trend. As a result, inventory is showing this slight upward trend. Now at 2.3 months of stock, still low, but it is relieving. Rental market, just like Bundaberg, is also seeing high market pressure. Vacancy rate now is around 0.6%, not seeing any significant increasing trend. So supply is still very tight compared to the housing demand. Rental yield is still healthy, around 5%. As we know, Cairns almost contains 2 parts, the north and the south. South has lots of older houses, while north is relatively new. If we compare the rental yields of the 2 regions, north actually is seeing lower rental yields because of the higher house prices there, while south is seeing slightly higher rental yields. And at last, from the market cycle perspective, Cairns' last 10-year average growth or annualized growth was 5.9%. Again, very much in line with the long-term average, but not as much as Bundaberg's 6.7% annualized growth. So in summary, in Cairns, we are also seeing a very strong local economy. Sales market pressure is high but slightly relieving, and the rental market is still high. Its 5.9% annualized 10-year growth shows that it is also towards the second half of its current growth cycle. Then overall, we are putting Cairns at the 5th place of our leaderboard. Then next stop, let's go back to central Queensland and look at Rockhampton. Rockhampton's population growth is around 1.4% over the past year, and among the 1.4%, 0.7%, so basically half of it is contributed by internal migration. Both of these have been increasing ever since 2016. Job market is not as strong or active as Bundaberg or Cairns, but it is clearly strengthening. Currently, the unemployment rate is around 5.1%, not too much higher than its last decade lowest level. In 2023, there was an increase in unemployment rate, very likely because of the high interest rates, but now we are seeing it declining again. So in the sales market, we're seeing a really high market pressure. So days on market is still declining steadily. The current days on market is around 59 days, and moving forward, we are confident that it'll go down continuously. Vendor discount has been stabilized at around 6.8, 6.9%, and there's no significant increasing trend at this moment. Now, supply and demand. The number of for sale listings has been a bit bumpy over 2024, but it's still hovering around the lowest level in over a decade. At the same time, number of sales has been stabilized over 2024. In recent months, there seems to be a slight tick up in the number of listings and a decline in the number of sales. However, given that Rockhampton's number of listing trend has been a bit bumpy, we would need more time to monitor these trends. So overall, inventory level has been largely declining ever since late 2023, and now it is sitting around 1.6 months of stock. That is an extremely low level. In the rental market, again, pressure is high. Vacancy rate is around 0.7, being steady, and rental prices have been growing steadily as well. Rental yield, although declined over the course of 2024, is still sitting at 6%. Considering the high interest rate environment right now, that rental yield is really healthy. Long-term growth. Over the past 10 years, Rockhampton's annualized house price growth was around 4% per year. That is lower than Australia's long-term average of 5 to 7%. So in summary, we are seeing a strengthening economy in Rockhampton. The sales market pressure is high and the rental market pressure is high as well. In the long term, from a cycle position perspective, Rockhampton should be at the peak of its current growth cycle. Based on that, on our leaderboard, Rockhampton will go to the 4th place. Next up, Townsville. Townsville's population is now around 1.4% growth in a year. Although it's not really impressive, it's already the highest in the past decade. Internal migration is not really impressive compared to the other cities, but it's already recovered from the net negative growth in the previous years. Job market is active with unemployment rate 3.9%. Although we have seen this increasing trend since 2023, I wouldn't think that's a big concern because one, it is still well below 5%. And 2, it is much lower than its last 10-year average. So overall, the economy is strengthening. In the sales market, pressure is high. Days on market is now decreasing again. In 2023, we saw some increase in the days on market, perhaps because of the high interest rate and the low buyer's confidence. But now, over the course of 2024, we are seeing it declining. Vendor discount. There seems to be a slight increasing trend in vendor discounts, but it's just slight. We need more time to monitor it. And from a supply and demand perspective, number of listings has declined to the lowest level in over a decade, stabilizing there. And at the same time, number of sales is slightly going upward. As a result, inventory has been declining in 2024, and it is now sitting at an extremely low 1.1 months of stock. Rental market pressure is high as well. The vacancy rate is now 0.6%, slightly higher than 2 years ago, but it is stabilized without any significant upward trend. Rental yield now is 5.8%, very similar to Rockhampton. If we consider the high interest rate environment, this rental yield is quite healthy. And then the market cycle position. Townsville's last 10-year annualized house price growth was just 2.9%. That is much lower than its long-term average, with a lot of room ahead for growth. So in summary, Townsville is seeing strengthening economy, high sales market pressure, and high rental market pressure. In its growth cycle, it is very similar to Rockhampton at the peak of its current growth cycle. Just one thing I wanted to explain. When I say at the peak of its growth cycle, it doesn't mean that it's gonna flatten and decline. What I mean is that it's in the fastest growth phase of its cycle. It might stay here for a couple of years, until we see pressure relieving signs like we have seen in Bundaberg or Cairns. So considering all the trends we have seen, I would like to put Townsville at the 3rd place on our leaderboard. Now the 5th place we are going to is Gladstone. Gladstone's population growth in the past year was above 2.1%. Apologies, I thought Bundaberg was the fastest in population growth, but I was wrong. Gladstone is the fastest growing in population. Internal migration is also strong, currently very close to its peak 10 years ago. Job market is strengthening as well. Now the unemployment rate is 5.5. Doesn't sound really low or really healthy, but if we compare it with its own last decade average, it is still around the lowest level since 2015. So sales market pressure is high. Days on market is now trending downward steadily. Vendor discount is trending downward steadily too. Now it seems to be stabilized at around 5.6%. That is the lowest among all 6 cities already. And if we look at supply and demand relationship, number of for sale listings or the supply level has been trending downward over 2024. And at the same time, the number of sales is trending upward. As a result, we are seeing this fast decline in inventory level, currently sitting at around 1.3, 1.4 months of stock. In the rental market, vacancy rate is not as low as the other cities. It is now around 0.9%. But one, it is still well below the 2% high pressure level. Two, if we look at its last 5-year vacancy rate trend, we'll see this is almost the lowest level in more than 5-6 years. Rental price growth has been faster than sales price growth since 2022. Rental yield has been increasing since 2022. It's only very recently that sales price growth exceeded the rental growth and made rental yield went down a bit. But still, rental yield is above 6%, very healthy, attractive to investors. Market cycle position-wise, Gladstone's last 10-year annualized price growth was well below 2%, around 1.5-1.6% per year. That is so much lower than its long-term average. Plenty of room ahead for growth. So in Gladstone, we are seeing strengthening local economy, high and increasing sales market pressure, and high rental market pressure. And because of its low last 10-year annualized growth, we believe it is still at an early phase of its current growth cycle. So considering everything we've seen, I would like to put Gladstone at the second place on our leaderboard. Now, you must have known which city is the top place on our leaderboard. So that is Mackay. Mackay's population growth was 1.4% over the past financial year. It has been a bit bumpy in recent years, but it's still at the highest level of more than a decade. Internal migration has also been recovering ever since 2016. Unemployment rate in Mackay is now around 3.8%. Similar to Rockhampton, it has seen an increase over 2023, but now it is declining again. In the sales market, we are seeing a steady decrease in days on market. Now it is just around 50 days on market, and based on the trend we're seeing, it's not gonna stop. Vendor discount has declined from 2023 to the current 6% and is stabilized there. Number of listings has been largely trending downward over the past 2 years, and at the same time, number of sales is slightly increasing. As a result, inventory is now 1.5 and is still steadily going down. In the rental market, vacancy rate is stabilized at 0.4%, the lowest among all 6 cities. Rental yield has been increasing steadily, and the rental yield now is also above 6%. And in terms of growth cycle position, its last 10-year annualized growth was just 2.1%, well below its long-term average. So in Mackay, we are also seeing strong population growth, strengthening local economy, high and increasing market sales market pressure, and high rental market pressure. And because of the 2.1% last 10-year annualized growth, we believe that Mackay is sitting at an early stage of its current growth cycle as well. So based on what we have seen in Mackay, I would like to put it at the top place of our leaderboard. Just one note to make here. I'm putting Mackay at the top place on this leaderboard just because of its high and increasing market pressure and its high growth potential in 2025. But there is one tiny risk associated with Mackay's economy. The mining industry is contributing 27% of Mackay's total output or GDP. Compared to the other 5 regions, Mackay is more heavily reliant on this one single industry. And this reliance makes Mackay's economy less balanced than the others. And in the long term, it might become a concern. So that was 6 Queensland regional cities ranked by market pressure and their potential growth in 2025. I hope you enjoyed it. If you have any questions, please leave a comment below. Arjun and I will try our best to reply to every one of them. I'm Junge Ma, the lead research analyst at InvestorKit. Thank you for your time, and I'll see you next week.